What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Monday, May 13th. All right, guys, SPY here on Friday finished the day up 67 cents per share. That's plus 0.13% in regular trading hours. It fell about a point in the after hours. However, it did so on relatively low volume, pretty average, at least here on SPY. So take that with a grain of salt. For me, off hours, pre-market, after hours, I always take it with a grain of salt unless we're seeing a move play out on substantial volume. My rule of thumb is kind of volume that at least meets or exceeds, for a sustained period of time, the midday volume of the previous intraday session. And honestly, guys, that typically only happens on earnings reports or off-hour news, which would be more specific, I think, to a blue chip. Okay, so let's take a look at this. Let's take a look at the volume profile, do an analysis on that. We'll take a look at the psychological levels that the big money's watching, so we're going to need to pay attention to as well. And then we'll look at implied volatility, the expected move for Monday, and the directional bias coming out of the chain for Monday. So let's just start here with a little volume profile analysis on the 5-minute chart. Listen, guys, if you are new here, by the way, SPY is a daily upload. My goal here is 10,000 subs, so I appreciate you subscribing to the channel, and I will keep the SPY videos coming daily. Okay, so let's take a look at this volume profile. I really want to take a look at this pop and drop that we got off of the open and through the morning here on Friday. And really, guys, what we're looking for is bias that lies within the volume profile that isn't so clear just by looking at the price action. It's like looking under the hood. Peeling back the onion is a good way to look at it. You can see here that we have a pretty contextual open. It fades. We get a little bit of a red bar pop. Listen, that's a bigger bar, but it also has a wick on it. And not only that, but it's also an outlier. Okay, so I like to skip over the outliers. There's just too much of a risk of fooled by randomness. And if we were going to go and apply bias to every candle like that, we'd be here all day and we'd learn nothing. So moving through the day, it's actually quite normal. We get little pops here and there of varying sides. And then heading into the close, there's really nothing extraordinary going on, except we see a very high volume closing bar and then a pretty high volume first bar after the bell. Both of these are going to be rebalancing bars. Okay, you can see that bar into the close actually did have a little bit of selling volume. Additionally, that wasn't, it was a little bit of a sell bias bar, I'll say. Typically, rebalancing bars after the bell on blue chips have very little movement, and they look similar to this one here, because there's a lot of buys and sells hitting at the same time. On SPY, though, we tend to see rebalancing straddling the close rather than just after the close, which is what we see on blue chips. So this bar here, the fact that it's a bigger sell bar, I mean, sure. You know, someone might argue that that's a little bit of bearish bias. What would make this obvious bearish bias to me is a little bit of an accelerating red volume a little early heading into the close. Volume held off until these two bars. I'm just not comfortable assigning much. So listen, let's move on here. Let's take a look at the self-fulfilling prophecy psychological levels, starting with the very simple 30-minute chart. And this chart's very simple because I like to only look at what I know has a lot of eyeballs, because that's self-fulfilling prophecy mentality. So here on Friday, guys, SPY, it did give up the 50 period. We faded hard, tested it, eventually worked our way under, retested, and kind of closed arguably like right on top of it. We never really reclaimed it. So this is really up in the air come Monday. For bulls, what I'd really want to see is a high volume reclaim of the 50 period, low volume retest, and then boom, a high volume bounce. Any downside test of the 200 period, that gray line bulls, I want to see that hold, ideally on as much volume as possible. Now, bears, the 50 period, if we retest it, you guys obviously want to see that hold as resistance on big volume. And your ultimate goal here on the 30-minute is to rip downside through the 200 period, retest it on low volume, and reject it, ideally all within the same day, to reclaim that as a hard short-term resistance, as well as that 50 kind of by default. Now, let's move on to the 4-hour here. Really quick, guys, as far as macro things occurring here on Monday, not a whole lot. 30 minutes before the market opens, the Feds Mester and Jefferson are expected to speak. That's really about it here coming up on Monday. But here on the 4-hour chart, guys, you can see that we are a little bit away, about 1.4% away to that 50 period, which is very, close to the 200 period. We're getting that crossover right now. That's fine. I think the crossovers are overhyped personally, so I'm going to go ahead and ignore that. What I'm really looking at is the aggressive ascending pattern of that 50 period. Bulls, it's kind of far away. If we were to see a retest, of course, bulls, we'd want to see that hold. Bears, you'd want to see that downside breakthrough, ideally both of those. But what I'm really watching is bulls, that 50 period ascending as quickly as possible, reclaiming whole dollars time and time again, kind of that stair-stepping attitude of an ascending area of potential support. That's really what I want to continue to see. Okay, because once you get that pattern forming, if you see retests periodically on the 4-hour of the 50 period and they hold as support, it just helps to continue to push it higher based on the psychology getting withered away from a bearish perspective as that thing continues to ascend and act as support time and time again. That's the pattern you want to see as a bull. So that's ideally what I'm watching day to day to see how is that forming. Whereas bears, the only way to really break that is to break both of those downside and hold them as resistance. All right, now let's move on to the most important chart of all, and that's going to be the daily. Okay, now you can see here on the daily, we are approximately 1.6% away to the downside from the 50 period moving average. Okay, but if you look here, we're about 0.75% away from all-time highs. So listen, this is what I'm really watching on Monday. Bulls, ideally I want to hold 520. It's just a small little psychological level. But really, a huge power move out of the bulls would be to break and hold 525 come Monday. That's not only another psychological level, but it's the all-time high, which, you can't really get much more encouraging for a bull or, ideally discouraging to a bear than that. Okay, now bears, how do you discourage as many bulls as possible? Break back downside below 520 and completely delay that test of all-time highs. All right, that 50 period's a little bit of a ways away. It's usually, for the majority of days on SPY, that's a little bit of a move. Okay, anything over plus or minus 1% on SPY is a pretty big day. But of course, if that comes back into play, I'll be watching it in the same way that we always are when it is in play. Okay, now implied volatility. You can see as compared to the last few months, IV is just about at the lowest point that it's been in the last 3 months. Okay, if you're getting IV crushed, that would be why. And if you're looking to purchase new calls or puts, it's not a bad position to be in. You're paying the least amount of Vega value up front that's been priced in for the last 3 or so months. It's not a bad deal if you think that it's going to return more to equilibrium from here. Now, expected move. We, of course, have the luxury of daily expirations here on SPY. So if we look at the 13th of May, that would be Monday. The expected change by Monday's close compared to Friday's close is plus or minus $2.23 a share. That's the expected volatility. Okay, so if you agree, and by design, by the way, that does not have directional bias. That's on purpose. And if you disagree with that expected move, that opens up the possibility or the potential that could be a position for you, right? That's kind of the idea, is to disagree with something in a variety of ways, and then once those ways line up, that's a position, all right? Now, directional bias, you're probably thinking, okay, that's great, what about directional bias? We can take a look at volume. So this is all the volume from Friday, over 7 million total contracts traded. Of those, we had 3.43 million calls and 3.93 million puts. So a bit of a bearish bias on the overall, but if we break that down by short-term speculators, that 0 to 20 delta range, we had about 1.16 million calls and about 1.86 million puts. Bearish bias out of the short-term speculators there as well on Friday. Listen, if you get value out of these daily SPY uploads, I ask you to do one thing. Leave a like on the video. I appreciate it. Get out of here and enjoy your day, and I'll see you in the next one.